We do our market update. Thanks for coming in person here. Our market update, generally we go over the Calgary real estate stats, and what we want to do today is focus on a few numbers here. Total sales, let me just move that. Active listings and average price. You can see that for the month of October so far up to today, we're up 20% over October of 2022. And we're also up over 2021 in sales. No, actually, we're below 2021. So for total sales, we're still going up. If you look at the bigger markets like Toronto and Vancouver, they're going down in their total sales. This interest rate hikes that we've had over the last 18 months are really hitting the bigger markets because their prices are so high. So qualifying for these mortgages for 1.5, $1.6 million homes is very hard. Whereas Calgary's average price, you can see it right here, it's $544 as of today, because these stats are like real time. And what we see there is our average price is still going up.
Yeah, Tim, you were saying today detached homes are at 650,000. Yeah. So we've been saying for about 5 years now that the average in Calgary should be around 650,000, and we just got there just this month. So where are we going? Everyone asks that. You have to remember, when you look at these stats, there's different segments in the market that are actually going through the roof right now. So the condo market, anything under $500,000, that would be semi-detached, it would be townhomes, and it would be condos. Anything under $500,000 is going up roughly 10% right now. So why is that happening? It's because it's the most affordable price range there is in the market. And then when you go upwards, it starts to slow down a little bit.
Yeah, and speaking about the other cities and condo prices, if you look at our average condo price right now, it's about 300, a little over 300,000. The average condo price in Toronto and Vancouver are upwards of 600,000 or 700,000. So we've got clients that are coming from Toronto to buy either rental properties, condos as rental properties, or to move into them here because the price is so good.
Yeah, and we went to a meeting last week with CMHC, and they're saying the population boom in Calgary. So what has happened all the time here, Tim, since we've been in the business, it's been relied on oil for the market to shift. Finally, it's the population that's coming here, and people are coming here because they're not tied down to going to the office every day. They can work remotely. So that's fueling it right now. How long is that going to last? Who knows? But there's certain sectors out there that they may never go back to the office and continue doing what they're doing. So I took these numbers down today. In the last 7 days, to give you guys a snapshot of the last week, we had 222 listings come on the market. And out of those 222 listings, or out of what's on the market in total, 278 sold. So there's more property selling that's actually coming on in the same 7-day period. And then on top of that, 208 listings went pending. So with the total amount of listings and not enough listings coming on, we're dwindling down on the number of
and you can see the active listings here, 5,300 to 4,200 to 3,400. So it's a downward trend. And what we're starting to see is the new listings coming on it's shrinking. We've noticed it in the last couple of weeks even.
Yep, question.
If you look at the October prices, actually, the question was, is it not standard for the active listings to fall and the new listings to fall coming into the winter season?
Yeah. So there is a bell curve. Normally, we haven't seen that bell curve for like 3 years now, Tim, because the market has been crazy. So normally, typically the colder months, but we're just getting into it and we're already seeing it. So something's going on. We're thinking, Tim, you're saying today, our gut feeling is that people don't have anywhere to go.
Yeah,
so
you can put your house on the market and sell it, but where are you going to live? There's nowhere to rent because rents are through the roof and there's nothing to buy. So it's kind of a catch-22 for sellers right now. They want to sell, but there's nowhere for them to go if they do sell.
Yeah, exactly. So you got someone in the waiting room. So where does that leave Tim and myself? I could tell you, we've got people. I had a young couple on the weekend. They're like, this is taking too long to find a property. And it's because we are very selective on the properties we buy for our clients. So we would only buy properties that we would buy ourselves for our clients. And under 500,000, there's nothing. There's nothing. We've had to ask our clients who want suited properties, you'd be in the half duplex range now. And we can't even find those. So you'd have to get a half duplex that hopefully has a finished basement that you could just put a kitchen in. But then that's still a $30,000-$40,000 reno, right? So it's a bit of a catch-22 we're in. And in this market, people can make wrong decisions, but this couple that we're dealing with, they're renting right now and their rents went from $2,400 to $2,700. So they want to stop renting, but we just can't find the perfect property for them. And one last thing we want to touch on with some of the areas, because some people get frustrated and then go into an area, Tim, that we would not go into. And some of these areas, say in the northeast or really in the southeast,
Yeah, straight east on 17th.
East, there's still problems there. Like there's still, if you're not a thick-skinned investor, like we say, if you're a newbie, there's no way we're going to put our young clients or a new investor into a place where there's drugs, and the drug problem is real. Like it's getting worse here. We were just saying that today. There's no way we're going to put new investors into those areas because we want to protect them and make it an enjoyable experience.
Yeah. Okay, so we'll get Danielle DeMarco. She's our real estate investment mortgage expert. She's going to come online here. For the people in the room here, you're just going to be able to listen to her. We haven't figured out the AV yet. So Danielle, if you could come online and talk about mortgage rates, that'd be great.
Yeah, for sure. Thanks for having me. Okay, so interest rates are on everybody's mind. Obviously, the last couple of years have been a little bit crazy. We do have a Bank of Canada rate announcement coming up tomorrow. So people are wondering what's going on. It's kind of a toss-up. Inflation is not where it needs to be. The Bank of Canada has made it clear that they want to continue to raise interest rates. Not that they want to, but they feel like they will have to continue to raise rates if we can't get inflation under control. So having said that, do I think they're going to increase tomorrow? I'm hoping not. I'm hoping it remains stable. But do I think that we might see an increase prior to the end of 2023 still? Yes, potentially. So, never mind.
Danielle.
That's okay. All good. I think you stopped the video, which is all good. Sound is fine. So yeah, so typically we would obviously in the morning find out whether or not they do raise the rates. If anything, we might see a quarter point. But tomorrow I'm holding fingers crossed that everything remains as is. Tiff Macklem, for those of you who don't know, who is the Bank of Canada governor, he has been saying that he still wants inflation to be at 2%. And in September, they did agree that rates might and likely need to increase prior to the end of the year. And in trying to balance the risks of under tightening and over tightening, they did decide most recently to not increase that rate. But again, tomorrow's up for grabs. So I wish I had a crystal ball and could tell everybody what's going to happen, but I always do like to remind people that the overnight lending rate, if it does change, it affects variable interest rates. So things like variable rate mortgages, not fixed rate mortgages. So for those of you that maybe have been pre-approved with a fixed rate or are purchasing a home and taking possession soon and are in a fixed rate, you're not going to see any effects if that rate does change. It's only those people in variable. Something new that came out last week, actually. So for any of you who purchased a home and paid the CMHC insurance premium, so typically that means a less than 20% down payment, you will now be able to qualify at maturity on the actual interest rate instead of the higher stress test rate. So when I talk about this, what I mean is, let's say, for example, your mortgage is coming up for maturity in December of this year, and your lender sends you an interest rate offer and says, hey, sign on the dotted line, but we're going to offer you, 6.59%. Well, you might be looking out in the market and realizing, hey, I can get, 5.79%, which is significantly lower. However, up until, last week, you would have to actually add 2% to that interest rate and qualify. So at almost, 8-9%, you're trying to qualify. A lot of people who purchased at 2 and 3% can't qualify at that high of a rate. So what they're doing is they're saying, hey, if the rate is 5.79, will allow you to qualify at 579 instead of 779, which is 2% higher. So that's actually going to be quite a big difference. I think we're going to see people have options when they come up at maturity now to potentially switch lenders for lower rates, rather than not being able to qualify and be stuck just signing on the dotted line at whatever rate your bank is offering you. So that's kind of an added bonus that's come out. And then the other thing I kind of want to touch on, we've been doing a lot of this last year with people who are coming up for renewal. For any of you that have mortgages that are in that 2-3% range, obviously we're nowhere near that now, unfortunately. And people are coming up and they're concerned about rates, even on investment properties, right? If your rate's going up, sometimes that can be the difference between cash flowing or not. So what we're looking at doing a lot of right now is refinancing. So where we're taking that amortization, extending it back out to 30 years. And so by doing that, we're able to offset sometimes those higher rates with having a shorter amortization at maturity, extend out the amortization and keep the payment similar to what you're paying now, as close as possible, rather than, again, just signing on the dotted line. So I'm just recommending to everybody right now, for any properties that are coming up for renewal, reach out and see what your options are on them, because you know, these rates are affecting cash flow and they are affecting budgeting for those of you that, you know, have a property that you're living in. And for those of you that have seen an increase in debt, we all know the cost of living has gone up. Because property values are high right now, there's a lot of equity in some of these properties that you might own. So we might be able to access some of that equity, consolidate some of that debt, extend that amortization out, and kind of get people in a better spot on properties they own and live in, but also on some rental properties as well. So lots of options when it comes to financing. Don't feel stuck if you're coming up for renewal and your mortgage is maturing with these higher rates. Reach out, have the conversation, and see what those options are. So that's kind of it for me for tonight, with a little bit of an update.
Awesome. Thanks, Danielle.
Yeah, no worries.
Awesome. Those that don't know Danielle, we've been using Danielle since 2006. We always say she doesn't just get you a mortgage, she gets you a mortgage plan or a mortgage investment plan. She's awesome. So her details will be on the screen. Feel free to take a snapshot of that and get in touch with her. That's the first step to investing in real estate, is understanding where you're at financially so you can move forward. Once we know that number, what you qualify for, we can then work out the best property for you. Our presentation tonight is one of our favorites. It definitely,
there we go.
There's Danielle's details for everybody.